Hello, this is Stephen Thomas. I'm going to tell you a couple of very important things today. One is why credit cards are bad and why credit cards are one of the first worst financial decisions you can make in your life. I am not your financial advisor. I am just shedding light to some of my own personal experiences. First off, credit cards are one of the most marketed products in the history of man. More money have been spent on marketing credit cards to you as a consumer than any product in the history of man. Companies spend hundreds of millions of dollars marketing to you. Why? Because it is very profitable for who? The credit card company, the bank. And guess who it's not profitable for? You. Credit cards are marketed to every culture on earth. Doesn't matter, across the global line, every line. And there's nothing free. Even if you have 0%, there's nothing free about the usage of credit cards. Believe me. Credit card companies spend, what do they do with the hundreds of millions of dollars they spend? They study your behavior. Millions of dollars are spent on your behavior. They know your behavior better than you know yourself. The other thing is, some of us think, we can outsmart this credit card company. Now, let's think about this. We have a multi-billion-dollar corporation with all the experts that they can hire with billions of dollars, and you as an individual think you're going to outsmart them. That is a war you will not win. Now let's look at what happens with the studies of these behaviors. The biggest study is that when you use your credit card over cash, you will spend more money. There's a lack of emotional friction, and that allows you to easily just go and spend money, have no idea how much you spent. If you had to pull out cash, you would actually probably be more cognizant of how much money you're actually spending at this time. Studies show that you will spend between 12 to 18% more when you use your credit card over cash. That's just the bottom line. 178% increase for those who are using their credit cards on vending machines. This is what study shows. If you had to pull out cash, it's a little more difficult to slide $1 into a vending machine, but when you use a credit card, sales have gone up 178% for those who are using credit cards. What do you think? In the fast food industry, sales have increased 37% since credit cards have been used. And I remember today when there was no credit card usage at the fast food, it was all cash. When I was in high school, we paid cash. There wasn't even an option. Cash has an emotional departure. If you have a good Ben Franklin, it's very tough to just hand it over. But with a credit card, it's easy. Let's talk about incentives from the bank. Banks are not doing you any favors. And I can assure you that chasing credit card, or let's say points, because bank will give you all these great incentives. Oh, you can get points. Oh, you can get this. You can get that. You can buy these items for free. or get points and get some items, or travel points, whatever it is. There's a always, believe me, there's a rationale behind their offer. And I can assure you, tracing points is not a wealth building technique. Getting cash back is not going to add wealth to your pocket. Bank incentives are designed to make you spend more money. And one of the most profitable products in the lineup of a bank is, guess what? The credit card. That's why every single bank has a credit card. In fact, do you even know a bank that does not even offer a credit card? Now, here's another thing. Lending concepts. Have you ever heard the statement, the borrower is a slave to the lender? That is a statement that is as true as can be. As long as you are borrowing from a lender, the lender owns you. It's better to be the lender, not the borrower. Now let's look at another issue with banks and credit cards. Interest rates. Now, interest rates have been at its all-time low, and credit cards have not necessarily lowered their interest rates for you. Okay? My personal average interest rate, when I researched this, I was appalled to find that my average interest rate was 20%. The national or prime interest rate right now is currently 5.5%. Why am I paying 15% more? That is absolutely unreasonable, excessive overcharge in interest. Some credit cards charge interest as much as 36%. And I know of an individual who's is actually paying 36% on his credit card. He didn't realize it until I talked to him, and he looked at his statement and saw 36%. I actually thought there was a law against that, but maybe that was lobbied to be changed. Guess by whom? Probably the banks. Now, here's another nice banking trick that I uncovered since I decided to start researching. So, there's this thing called a minimum payment. And by law, a few years ago, banks had to actually put the length of time it would take for you to pay off your balance. And one of my cards said 16 years. Okay. Now, with the advent of computers and online accounts, you can go and set your minimum payment. And so what I realized is that when you say auto pay and you say set minimum payment, you're not using a set number. So whatever the bank determined is your minimum payment, that's what you pay. So I started noticing that the time of the payoff has not changed over a period of time. And I'm why? So what banks are doing is, with this auto pay minimum with no set amount, they will each month lower your minimum payment, let's say by $1, and at the same time they will increase your interest rate slightly. So what's happening is each month is extending your time that it will take to pay off your balance, and it's still the same time, 16 years. So what kind of deal is that? And you can't tell me that's not some type of studied, let's say, strategy for the bank, for those who are not following, to extend the length of time to pay the balance off, to do what? Pay them more money, more profit. And the bottom line is, this is a type of technique that will work for those of us who do not pay attention, and most of us do not pay attention to these small details. I mean, for many years, I didn't pay attention to it. And now, as appalled as I am paying much attention to this. So, what can be some possible solutions to this now known disaster of a financial planning strategy? Or let's say the lack of a financial planning strategy. So, one solution is don't use them. Once you pay them off, cut them up. Simple as that. Use a debit card. You can get the same benefits from a debit card. Why do you need a credit card? And if you really have to have one, try to get one with a low interest rate. Analyze the average interest rate from banks. And currently, today in 2018, the average is 14.4%. And you should get one with that or lower. Use it as an emergency only. The next solution as an alternative is to build assets that you can borrow against instead of wasting your time chasing a credit score to use a credit card that's going to put you in the hole or debt. If you take that same effort and let's say build a real estate, a stock portfolio, or some other asset that you can borrow against, then that is actually more financially sound because you can actually take out and borrow money against even your 401k, your retirement, or your stock assets. You can borrow at a much lower rate. Or take that extra money you're saving off of interest and just put it in a simple money market account. Either way, you will have your money to use when you need it. But if you were not paying bank interest, you would have a lot more to use. So hopefully you learned something from this today, and at least at the minimum walk away with at least some enlightenment on this whole concept of a credit card. To give you a, let's say, overview, make sure you at least run away with this. We'll just reiterate these points one more time before I say goodbye. Credit cards are not financially beneficial to the user, period. They are only beneficial to the bank. They are the most profitable product that the bank has created. They are not a wealth building technique, strategy, tool, whatever you want to call it. They encourage spending, which leads to massive debt. Do not use them if you want to build wealth. If you're not concerned about building wealth, then that's what happens. But if you want to build wealth, this is not a tool to use, period. Instead, build assets and leverage your assets. That's all I can conclude for today. Hopefully you have learned something, especially from my experience. And have a good day in your financial world, and good luck to you in your future. Thank you.